Good morning, guys. It is Thursday. Yes, it is the 3rd of May, 2018. This is the Dax morning briefing. Thanks for joining for the guys that are in the room already, and hello to the viewers that are at home watching. So hopefully in front of you, you're going to see the chart which we're going to build on. And this was a chart that I posted into the Telegram channel yesterday. If you're not already included in that channel, there's a link at the bottom. Just click on that. It's free. And you'll see charts like this occasionally. So the chart was pretty basic, pretty straightforward, really just taking a look at what was a supported multi-pivot line, supportive only because really it wasn't tested from the underside. And the line I'm talking about is this one here. I think it's gray. I'm colorblind, so I think it's gray. And as price was starting to bounce along it, you start to be able to draw out the highs and the lows, the peaks and the troughs, the swings, essentially, the minor swings. And what normally would tend to then happen is that could form some sort of action reaction. And it didn't in this case, but you can use it to, MPLs certainly can be used as center lines in action, center reaction line sets. So when it breaks through the multi-pivot line here, there's a bit of a reaction, bit of a pullback towards this line here. And what I found interesting is when you drew a parallel from this particular line, however your charting platform allows you to do it, I'm not sure why that's done that, because it is an ACR line set. But if you just draw a basic line and make that line parallel to whatever line set and tools you've got running, and then take that, as you can see, it's parallel, right back to this guy down here where the second arrow is pointing, you'll notice if you span that line and just keep it running, it catches price really well up here. That's the idea of what I was trying to do here. And I liked the way that it was working. So that was the reason why I posted that chart. And so let's just kind of take a look and see how it developed as it ran through. So it caught price a couple of times before frequency started to change, and it didn't really capture price action as well anymore. And in actual fact, it creates a little bit of its own action reaction here, and it's a bit of a center line already because it's caught it's now resistance on the underside. So what you can do first thing first is to draw a fork, and if you were just to kind of map out alternating pivots, because that's pretty much what forks need to be based on: high low, but never draw a fork if it's not an alternating pivot. And I'm just going to take these three as an example. Let's just make that fork black. Here we go. In fact, you know what? Let's just clear the chart out. Otherwise, this is going to get busy. Let's get rid of you as well. And you. Okay. It's always nice to kind of clean the chart up. So this is your first fork. Well, the first fork that I'm going to draw on this chart. Okay. So we'll zoom in on that. And we'll just take a look and see how price action works. Now, Alan Andrews, the guy who created these pitchforks, says there's an 80% chance that price is going to visit the median line. And the only thing I guess that I don't like about this particular fork is that the A line is not actually that great. It doesn't really have that many touches. In fact, it doesn't have any touches. There's not particularly strong A line. The BC line is quite nice. It captures price action frequency quite well. And if you draw a 50% line through the BC line, you'll see where there's a little mini kind of zigzag in the middle, which is like a balance point. So that is quite interesting. The bit that I'm talking about is in there. Look. If I just kind of take away price action here, you'll see it, a little zigzag. And that's nice when you see that right in the middle of the line, and the BC line captures the frequency of price. So I like to see those sorts of things whenever I'm drawing a fork. So I can kind of accept the A line not being that strong if other things look interesting while you're drawing it. So really what Alan Andrews says is that price is often going to reach the median line. And there's another rule, which I'm not going to go into, that's you can follow if it doesn't do that. Another doctor, academic guy who created a rule, but we won't get into that. So we'll just kind of see how price reacts, because one or two things will happen. It's either going to come through the lower median line parallel, or it's going to reach the upper median, the median line. Now, when it gets down here, you've got one of two choices. You can either just accept the fact that it's going to break lower, or you can be aggressive and buy this thing for the simple fact that you've got this particular pattern developing. Now, that what you would say is actually a swing break. And yeah, you could well argue that. So therefore, excuse me, this is a chance for it to break through. But it's the second swing back for me that's the trend defining level. Excuse me, apologies. So you take a look at the bar action and the bar by bar read, and you can just simply see how price is responding. Now that's an interesting candle right there. There's a pin bar right on the lower median line parallel, and it closes back inside and then takes another move forward. So if you were aggressive, you could take a long from there. And you want to get 3 to 1 really, if you can, but you want to be aiming up towards that median line. In fact, well, it's just why not? It doesn't really matter. Let's just give it as an example. And so you would simply put your stop underneath there. It's very, very aggressive type of trade because you haven't really got any structure to put this behind apart from maybe the second swing back bound down here. But if you were to do something like that, it would be on the basis that you believe that this trend is going to continue. It's going to reach the median line. It's actually taken a reaction off the lower median line parallel, and that gives you an opportunity to buy it if you believe that it will continue. So as it moves away, you'll notice that, and we're not replaying this market. I'm just, I've locked the candles, so this isn't increasing, but it just shows you what's going on. Now, price takes a run up towards the median line, doesn't quite get there. And you might think to yourself, okay, well, there you go. That's done. That's not going to work out. That's fine. But it takes a second attempt. And there you go. It reaches the median line. So it would have taken out your target and it's reached the median line as well. So I find that quite interesting. And now from there, the price is either going to reverse or you're going to get some kind of zoom through the median line and then a reach up towards the upper median line parallel. So that's one thing it's going to do. It's either going to zoom through it or it's going to reverse at it. So let's see what it does. And again, right down to the low median line parallel. Notice how it's still calling price action. Another bounce from the lower median line parallel. Still within that kind of channel, that lower median line parallel and the regular median line. That's the channel that it's still trading in. So price action has been called on what at the time did look like a not particularly strong fork because of the A line, but a nice BC line with a zigzag balance point in the middle. And you'll notice how price continues to stay in that channel. There's yet another touch on the lower median line parallel there, look. And we're starting to get the signs now. There you go. Well, that's actually a pretty clear sign. You're starting to get the signs now that that is the end of this fork, simply because we had another bounce. It started creating, I think that was a lower high. Double top, well, you might want to, it's tenuous. But we've taken a break through the lower median line parallel, started creating some newer lows. It's come back up to touch the underside of the lower median line parallel. And then from there, you've got to start to maybe concede that, all right, go look for something else. There's perhaps another option that you could do or go and find. Now, you've taken this particular move down. For me, really, still, you're probably going to remain bullish above that particular line there. However, you have to kind of wait and see for price action to zoom through that level to really show a change in behavior, change in direction for me. You might say it's there, but I would rather look at that level here. So if we move down, I've just had a question. What time frame is it? Yes, Rezi, this isn't a time chart. This is actually a tick chart, 250 tick chart. So the reason I use a tick chart is that there are certain periods during the day where there isn't a lot of behavior going on. So a tick chart generally tends to even it out. And when there's a lot of action happening, a lot of ticks are going to be forming. So more candles are going to form on the chart. And I just find that it shows the flow of price a little bit better than a time chart. If you don't have a tick chart on your current platform, then change your platform. Simple as that. And you don't necessarily need to change your account. Just get a different trading platform and log into your account. So yeah, it's a really, really useful tool. Okay, so where did we get to? So we're just broken through the low median line parallel. So for me, the line in the sand really is the 791, but you might actually say it's more like 808, and we're testing that now. Well, there you go, straight through that. Wide range bar, pretty clear indication that this level is dead. So really, yeah, the final line in the sand for me is probably here. So we've had quite a move through this. You'd expect it to kind of retrace it. And if you were thinking to yourself, all right, here's a change of behavior, I want to short this market, then you've got a really basic line set here that you could use, and you want to go and test the underside of it. So you kind of wait for price to come back and get back into that sort of zone before taking a short on it. So that's you know, if you believe that that's the change in behavior, that's the way you would trade it. You wouldn't short it there. You would wait for that pullback to load back up again. So this price obviously continues to move forward. It does that kind of thing, and you'll notice it here. So this wide range bar normally will get a revisit, and that's the revisit section in there. But actually, it was more this ignition point that gets the revisit, and this collection of sort of wide range bars that got the revisit. So that was the spot to mark out. Whenever you see a wide range bar breaking through a particular level of support or resistance, mark it out, because price will often take or get a revisit there. So that was the revisit. It's broken through that level. So that's pretty much the change in behavior for me. So is there anything else we can start to mark out here? Well, probably not yet, I guess. I think you just got to wait for this one to start to form what, well, there you go, what might form or appear to be a bottom. Now, I don't recommend that you do this next thing that I'm about to do, because it's a little bit fishy, and it can be a good forecasting tool, but it can also get you into trouble if you over rely on it as a technique. And that's what's called fishing for C. So with a pitchfork, you need alternating pivots, and you need three. You need an A point, a B point, and a C point. Now, C point needs to be a confirmed pivot. And how do you confirm a pivot? It could be a little bit subjective sometimes, but when you're kind of just thinking, well, maybe it's there, you're fishing for C. And I'm kind of going to do that at the moment. So it can be effective, but it's often not subjective. That's not the word I'm looking for, but it's dangerous. As a technique, it's dangerous. Now, the reason I like this particular fork set, in fact, actually, to be honest, what I might do is just restrict that just to get a better. I mean, you want to take the high, really. Wherever the high is on this one, that's probably going to be your pivot. So it is going to be that one there. So this is the fork that I'm going to use. Now, again, if it does follow Andrew's rules, and Andrew says that price is more often than not 80% of the time going to reach the median line once you've got three confirmed pivots. Well, there's the median line touch. From there, price will either reverse or it'll go on to reach the upper median line parallel. So we'll just continue to watch the flow of price. Excuse me again. You'll see that it reversed. Now that gives us another opportunity to create a new fork. So I'm just going to kill that one off. And I'm actually going to use this one, and this one. Alternating pivots. This one, and that one. It's quite steep. But you notice again how once you formed that particular level, got a double top at this zone here, you might sort of suggest that, oh yeah, that could have been a forecasted point for price to turn around. You could have fished for C again, maybe. But notice how if you drew the fork from that level, price went down to tag the median line once again. And sometimes you've got to think, well, maybe it's just a coincidence. And yeah, it could well be a coincidence. But when it happens time and time again, it becomes a little bit more than just a coincidence. So we'll just skip that one forward. Just watch the continued move of price. See if it gets up towards that upper median line parallel. Well, it actually spikes through that upper median line parallel and takes out a new low. So really what you want to be seeing here is price heading lower, or actually thinking to itself, okay, I've actually tagged now a new low, which it may well have done there. Let's just kill this fork off here. And then you could, if you wanted to, draw another fork. Where would you draw it from? Well, if you took it from this low here to this high there to this low here, then you'd have something like this. And you would want to see price go up to reach that median line. I guess one thing I've also spotted here is that'd be an interesting little confluence is a bit of a swear word at the moment, but I'll leave the reason why that is. But I just want to check something here. I've just drawn a very, very simple line across two tops, and I've taken a parallel from that line just to kind of see how it's capturing, just to see how it's capturing price action. Notice how if you pull it back to this previous low, it's also, well, it's basically a really, really clean channel. So that's going to be used for some interesting technical analysis at another time. Some form of action reaction or multi-pivot line sets can be used with that sort of price action. All right, we'll come back to that another time. Let's see how this moves. This is an expanding pivot, look. See that? It's expanding out. Something's happening in there. Just interesting observations to mark out once you've understood the tools and how they respond. So you'd expect this one to, oh, there you go, look at that. I was going to say you'd expect this one to reach the median line, but not only has it reached the median line, but it's also tagged the top of this line once more. Now we definitely have a resistive multi-pivot line. So if it breaks through that to the upside, that's going to be interesting. Same thing, if it actually then touches this and creates a third touch on here, be interesting if it breaks the downside. So I'll be watching this pretty closely, I think. And again, a reversal at the median line. So, you know, this stuff is really, really quite simple if you understand how to work out and map your pivots. But it's incredibly effective at forecasting. And yeah, I really, really do enjoy working with these tools. And I think that's pretty much bringing us up to current right now. So we're still inside this channel. We've had an expanding pivot set, which we've kind of shot up through here. We've created this mountain formation here now, and we're starting to coil. And we've got quite a large coil that's developing in here. And I've said this yesterday already, that think about coils as springs. You know what happens when you step on a spring. Okay, you've got all of that energy now that's been formed, or because you've created this potential energy as it's crushed, and so this coil wants to be like that, but you've compressed it to this, so you've got all that potential energy. And go back to basic high school physics. If you there's going to be a simple energy flow. You've got all that potential energy that's going to then move into something else, and now the way that's going to move is going to move into kinetic energy, which is movement. And it's exactly the same with a market. If you compress a market down enough and squish it, all that potential energy will turn out in one way or another to be movement, and it will break. The price will run. It will move from a value area, which is effectively what that is, into price discovery mode once more. It's just basic auction market theory, game theory. Study game theory. And that's pretty much the best analogy that I can use to explain it. So that is the forks work I wanted to run through. I've only got a couple of minutes left on here now, so I'm just going to wrap up. Just going to take a quick look at the 20-minute chart. Yeah, I guess we have got a very, very large spike through a previous level of, well, a previous major swing. So I'd like to kind of see a revisit on this. I've got multi-pivot line down here. It's supportive. I'd like to see a zone or a retest of that area. Not going to go into too much detail on here. As far as the volume profile go, the TPOs, the individual dailies that I've got here, incredibly thin volume below that level. You don't need a volume profile chart to see it. You can see it pretty clearly with that. Look at it, it's there, it's thin. It didn't stay there for very long. So it'll be interesting to see what happens, because price doesn't like trading in low volume zones. It either responds to them one way or another. It'll either bounce from them or it will zoom through them. So I'd like to see which way that reacts. Yesterday I said I'd eat my shorts if we reached the exposed POC up here. I had the knife and fork out, but luckily for me, I did not have to change my diet. So it didn't reach it. It may well get there today. We'll have to wait and see. But there's so many different options and ways that we could play the market. I'm just going to continue to observe and see how this particular coil completes. All right, guys, I want to stop the recording there, and I hope that was useful. If you haven't already, please do subscribe to the channel if you like what we're doing here. Like the video, send a comment, contact me on Telegram, or send me an email if you want the information. Come visit the website. We've been making quite a lot of changes recently, but if you want to really get sort of stuck into the nitty-gritty of this sort of stuff, then you're going to need to learn all the terminology and all the tools, and we share all that stuff in the premium channel, so come and join that if you are interested. All right, guys, have a great trading day, and we will be back again tomorrow with another one. Take care.